Warren Buffett said that the inflation has risen to alarming levels. We think this price increase is fascinating. Our costs are going up as a result of this. People are starting to accept it, and it's certainly not a deal breaker in the realm of home construction, including the manufactured housing and operation, which is the largest in the country, and currently we have 9 home builders. That being the case, the US continues to do a significant amount of housing, while price tags continue to rise. On the other hand, people need to protect themselves from this fearful inflation, and for today, this is Investing Path. We will be discussing Warren Buffett's suggested ways on how to prevent yourself from experiencing the negative consequences of this rapid recession. But before we go on, please make sure to give this video a thumbs up, and if you'd like to see more of our content, then don't be shy to click the subscribe and bell button for more of our financing and personal investment videos. Now, without further ado, let's begin. Starting off with Warren Buffett's example, he mentioned if the United Auto Workers drafts a 3-year contract, we get a 3-year contract. But if you purchase steel from General Motors or someplace else, you're paying more and more every day. In other words, the economy is getting near its weakest point, and nobody saw that coming. Because of the uncertainty of when we would be able to return to work, all of our businesses, including the furniture stores, were shut down due to the pandemic. He noted how, on average, that these businesses were closed for around 6 weeks and how uncertain they were about their future. However, the backlog keeps growing, and Warren Buffett had hoped, along with many others, that it would go away after the $600 payments stopped. And now, it just kept going and going until Warren Buffett got the figures around last August. Each week, either he or Irv Blumkin will phone and go over the latest developments at 3 separate stores in Chicago, Kansas City, and Dallas. When consumers have more disposable income, they tend to pay more. The carpet price hike for April was already published, so you know it's coming in the next month or so. To simply put it, our expenses are rising. Anything's practically a shopping frenzy, except in some locations you can't buy it because the supply lines have gotten all messed up. You are aware that it is not possible to afford air travel on a global scale. Money is being redirected from one area of the economy to another, meaning that most people have more disposable income than they otherwise would. Meanwhile, you are aware that many people are in dire situation. Meanwhile, Dairy Queen's original stories are popular, and their takeout locations are often feature creative retelling of these classics. However, the current economy is not very responsive to price changes. It's more inflation than most people expected 6 months ago. Inflation will have further reaching effects, and the fact that one smart guy believes it's risky is just the beginning. And to the extent that we borrow money from the rest of the world, it would be very human on the part of politicians in the future to decide that they would rather pay the rest of the world back in dollars that are worth far less than the dollars they borrowed, given that we are currently following policies in this country to stimulate things, which stimulate business, which is bound to have some inflationary consequences. There is a lot of external debt that people are accumulating, and this is the traditional method for mitigating its effects and expenses. It's fascinating to hear politicians argue that it's okay to spend taxpayer money on things like AIG bonuses since the money already exists. Taxpayers here in the United States are paying exactly the same amount as they were a few years ago because we have not raised taxes at all. In fact, this year's government receipts are expected to be closer to $2.3 trillion than $2.6 trillion. Fixed dollar investments are likely to end up footing the bill for our current activities. A large portion of it came from the United States government, and when the time comes to cash in their investments, they will find that their purchasing power has significantly decreased. And those who, decades from now, when they cash in their bonds, will have lost the most purchasing power due to inflation. This includes persons who own bonds issued by the United States government. Saying the taxpayer instead of the Chinese makes the cost seem more manageable. It's a fascinating predicament to be in, as several news every day are being reported about what a bunch of taxpayers are up to. And yet neither you nor Warren Buffett have seen their tax rates increase. So far, taxpayers haven't had to pay anything. And Warren Buffett expects a large portion of the cost will be absorbed by a decline in the actual value of fixed dollar assets somewhere in the future. We are currently experiencing high levels of inflation because doing so is both simple and plausible. The best hedge against inflation is the income you generate for yourself. Whatever your field of expertise, if you are the best at it, you will command a certain share of other people's output of products and services, regardless of the currency in use. Whatever the medium, whether it be seashells, pennies, or dollars. To sum up, nothing beats your own ability to bring in money. Regardless of the purchasing power of the national currency, in relation to some former benchmark, if you are the finest journalist in your field, you will be compensated fairly. Offering second-best security is a lucrative venture. If you own the corporation that uses the Coca-Cola brand, you know that 20 and 50 years from now, it won't make any difference whether or not you obtain a certain percentage of people's labor for your product. What has happened to the price level often because people are willing to work an extra 3 minutes or 5 minutes for an extra 12 ounces of a product they want. Your personal potential for financial success is paramount, but so is the opportunity for financial success in a fantastic business that does not necessitate a large initial commitment on your part. In light of the high initial outlay and the inevitable losses to inflation, Warren Buffett would advise instead that you put your money towards improving your own skills and knowledge. If you do the math and discount back at today's interest rates, stocks are dirt cheap right now. The young man would be wise to become a neurosurgeon instead of a bond investor. We have never actually seen what dumping money on the basis that we're doing it on a fiscal basis looks like, but we do have a picture of what interest rates will be based on the yield curve out to 30 years. And so on it, it's a fascinating period. Following a monetary policy of near zero interest rates is really comfortable. But there is one thing to keep in mind at all times when dealing with economics. You can never say never. On March 9, 2022, the president announced that 85% of Americans will receive a $14,000 check. 2 years ago, we predicted that 40% of Americans would be unable to come up with a $400 in cash. Today, we have distributed those funds to 85% of the population with no ill effects reported. People who get the money are happier, but those who lend it are less so. Nevertheless, this has led to a rise in stock prices, the expansion of businesses, and the satisfaction of an electorate. But there are always unintended repercussions in economics, and that's why Google and Apple are such fantastic businesses in terms of their return on capital. They don't call for a ton of initial funding, and they produce a steady stream of income. If you are looking for bonds that produce more money for the federal government, Warren Buffett has $100 billion that produces something like $30 to $40 million each year. The pressure is on, which is of course exactly what the monetary authorities want. But it all depends on the outcome of the short-term raises. They are driving the economy to the brink, and they are doing the same thing in Europe. We are helping them out with fiscal policy, so everyone's happy. Eventually, though, people will stop paying attention to the trillions and start treating the 1400 as if it were a rounding error. In any case, we'll see what happens. But Charlie and Warren Buffett both agree that this narrative is the most intriguing one he has ever seen yet. On the other hand, this is the most unprecedented economic situation that either lay people or trained economists have ever witnessed. What has happened to the professional economist reminds me of what Churchill said about Clement Attlee, that he was a very modest man and had a great deal to be modest about. They had so much faith in their own abilities, but they quickly learned that reality is far more nuanced than they had imagined. It's been said for a long time by Keynes that the best defense, the best investment against inflation, is to enhance one's own earning potential, one's own talent. This is because inflation is an unseen tax that only one man in a million truly understands. Few people make the most of their abilities, and if you improve those abilities, you can't be taxed for doing so. They can take it away from you. Therefore, if you can make yourself more valuable in your activities and career, be it medicine, law, or whatever else. That's the best hedge against a rapidly depreciating currency and the finest passive investment. Yes, Warren Buffett does believe that it is a worthwhile enterprise. Owning shares in a successful company is a great way to hedge against currency fluctuations. But it's amazing to see how the value of the dollar in the US has dropped from 94 cents when Warren Buffett was born to a current value of 6 cents. Inflation is a brutal penalty on those who put their faith in fixed exchange rates, but it is possible to make ends meet even in times of high inflation. For example, if someone had told us before from the day that we're born that $1 bills would be devalued to 6 cents, we might have asked to be taken back to the time before our birth. We have no desire to enter such a world, but everything seems to be going smoothly enough that we can't really complain. All in all, you should take the first step in investing in your skills now, so that in the future, as this recession continues to move rapidly, you won't have to worry too much because with the right mind and skill set, you'd be able to jump out of it easily. And so, that's all we have for you today. We thank you so much for watching and we hope you learned a thing or two in this video. If you liked this one, please give us a thumbs up, and if you're looking forward to seeing more of our uploads, then click the subscribe and bell button to stay updated for more. This is Investing Path. If you have any thoughts about this video, then feel free to share them. But otherwise, thanks again for watching and we'll see you on our next video.